So with the tax year ending, you guys might be thinking, which ISA should I go for? Now is the time to open it up, and today I'm going to look at which are the best stocks and shares ISA on the market. Now I am looking to do a portfolio update and show you guys exactly what I've got on my portfolio, but I've kind of been holding off on that because I'm in the process of looking to transfer. I'm looking to move providers, and I thought now is a good time for me to do the research, share my research with you guys, and then you can make up your own mind to which broker to go for. I'm going to try and keep this comparison as transparent as possible. I'm not paid to promote any of these, so it's going to be completely open and my own personal opinions. As always, it's not financial advice, so please feel free to do your own research before opening any of these accounts. And what I'm going to try and do is actually break these down in a comparison table. So rather than me go through broker by broker and you skip through the video because it's so boring, I'm going to put them side by side and we can break down all of the key components for you to make up your mind which one's the best. And we'll decide which one wins on each factor. Just before we begin, I want to just clarify, I'm not including things like Nutmeg, Wealthify, Moneybox, because they're kind of done for you ISAs and investment devices. I wouldn't really class them as stocks and shares ISAs. Although they do the same kind of thing, they're kind of all controlled for you, and the results they kind of yield are not worth bothering with, in my opinion. And just one note, because I'm sure I'm going to get some questions, I have looked at eToro, and eToro don't seem to offer an ISA option. They seem to be more down the line of shares and copy trading. I'm not going to be mentioning eToro in this video. For the purpose of this video, the companies I'm going to be looking at are Hargreaves Lansdown, Interactive Investor, IG, Vanguard, AJ Bell, Freetrade, and Trading 212. They seem to be the most popular companies around, ones that I've heard of, everybody's probably heard of. I wanted to include all of these because I think these are the top companies and I don't want to just limit it to the ones that pay the most affiliate income like a lot of videos do. The first thing we're going to look at are what are the ongoing charges with the accounts. Hargreaves has a 0.45% charge on their account, which is actually capped at £45 for the year, which works out at £3.75 a month, so that's pretty reasonable. Interactive Investor has a £9.99 charge a month. Now when you're looking at these charges, it's going to be important to look at the other factors later to work out which one's the best. So just bear with me on this. So IG has an £8 a month charge if you have less than 3 trades in the quarter. If you trade more regularly, they will void that fee. Vanguard, on the other hand, is slightly different. Vanguard charges a 0.15% management fee, and it works out to be £1.25 a month on 10k. But Vanguard is quite separate in itself, and I wouldn't really class it as a stocks and shares ISA. You can sign up for an account on Vanguard and open one of their funds, but you can just as easily buy a Vanguard fund through something like Freetrade or any of the other people mentioned here. AJ Bell has a 0.25% charge, which is £3.50 a month. You've got Freetrade, which is £3 a month for their ISA, and Trading 212 is actually free. So if we were just looking at charges alone, obviously Freetrade is going to be the winner here. Now it's important to consider all of the factors before you think, okay, Trading 212 is free, let's go for that one. So let's take a look at the next factor, which is the amount of shares and ETFs that are available to trade. So we've got Hargreaves Lansdown with 10,000, we've got Interactive Investor with 40,000, we've got IG with 16,000, now Vanguard only has 70 funds. It doesn't actually offer the ability to invest in single companies, which I think is quite a limiting factor and knocks them down in my view. I think being able to invest in a wide range of products, wide range of funds is really strong and what you should be aiming to do. AJ Bell have 2,000 funds. They don't mention exactly how many shares they have on the website, but I don't think that matters too much. I don't think you're going to struggle at all to buy shares that you want to. Freetrade comes in at the lowest with 4,000 available. Now 4,000 seems really low, but actually I've checked and all of the ones I'm invested in are all available on Freetrade. Trading 212 on the other hand has 10,000. Now when you look at the number of shares available, it doesn't really matter too much. If you're just a general investor, even with Freetrade, you're going to find pretty much all of the ones you want to invest. Freetrade does have a $9.99 option for regular accounts with more available, but you're probably not going to need that. 4,000 companies and funds is plenty to choose from the average investor. If we were looking just on shares and ETFs, then obviously Interactive Investor would be the winner on that front. The other thing to consider here is a lot of the shares that they do mention might be penny stocks and something that are really high risk and things you guys don't want to invest in, so I wouldn't worry too much about that. Now the next factor we're going to look at is the dealing fee. Now the dealing fee is really where the costs start to add up if you're not careful. So on Hargreaves it costs £11.95 to make a trade, and now that does scale down depending on how many trades you make, which is where they become more expensive than some of the other options. So if we look at Interactive Investor for an example, they charge $7.99 per trade, but they actually give you one free trade per month. So if you're just buying one share a month, it could really lower your costs. But if we look at something like IG, as long as you're placing more than 3 trades in the quarter, they're charging you $0 on US trades and £3 on UK trades. So they're obviously a lot cheaper than Interactive Investor. Vanguard, on the other hand, are different because they're funds. If you invest in any kind of fund, there'll be some kind of management fee on the fund, so it's really hard to compare them to the others at this stage. If you're buying funds within the others, you would pretty much pay the same costs. AJ Bell, again, is quite expensive at £9.95 per trade, and this is where it all starts to change. So on Freetrade, you're getting it for free, and with Trading 212, you're also getting it for free. So if you're going to be trading on a regular basis, you can save an awful lot of money by going with Trading 212 or Freetrade. So in this category, it's clear that Freetrade and Trading 212 are the winners. And I'd follow that closely by IG, because their fees are quite low if you're trading regularly. So now we move on to the FX fee, which is a foreign exchange fee. So when you buy a share overseas, you're going to pay this fee. And this is why I'm moving away from Hargreaves, because it becomes very, very expensive. So if I just show you an example on their website, you can see the foreign exchange charge changes. So on the first 5,000 it's 1%, the next 5,000 0.75, the next 10,000 0.5, and over 20,000 is an additional 0.25, which doesn't sound bad and they seem quite low, but in reality, last week I bought £27,000 worth of silver and I paid about £250 to £300 in charges just to buy those. And with other people, it would have been almost half that. So just on that alone, it does knock them down quite a peg and make them quite expensive. Interactive Investor at 1.5, which is still quite expensive. Now this is where companies like IG start to shine. They're at 0.5%, so that would be a really big reduction on the price if you're buying shares overseas. Vanguard of course don't have this because you're just buying into their funds. AJ Bell are quite similar to Hargreaves, they have a 1% under 10,000 and it also starts to scale. So if I were to place the same order, I'd still be looking at the really high fees, so they're no good for me. Freetrade is slightly lower at 0.45 and Trading 212 are at 0.15. So in this category again, we have Freetrade and Trading 212 coming in at the lowest, but we also have IG in a close second. Now at this stage, I think it's really important for me to tell you guys that there is a hidden cost with things like Trading 212 and Freetrade. Now there is a difference between the price you pay for the share on different marketplaces. And that's basically like if you were going to a shop and you were buying a product, they buy it from a wholesaler and they increase the price to sell it to you. Now Trading 212 are quite notorious for doing this on certain shares. You wouldn't notice this on a day-to-day basis, but overall it will end up costing you some money. So there is a hidden cost in there that you might not see. And what I would say with these, don't get too carried away just because something's free. When in life have the best things been free? There's always some kind of hidden cost or catch. And in my own personal opinion, it can be worth paying for professional service. And when things get tough, they're not going to completely shut down, like Trading 212, who have currently closed their doors to new applications. And on that note, I'm actually going to give Freetrade another mark, and I'm going to note them down as second, because they are the cheapest option after Freetrade. So the next thing that's quite interesting is, do they offer fractional shares? Now apart from Freetrade and Trading 212, they don't. Now fractional share is basically instead of buying an entire share, you can buy a fraction of that company. I've never personally done it, but if you want to invest tiny amounts, it can be a really nice option. Now the reason these bigger people don't do it is because they are charging these fees on the trades. For example, if I want to buy £5 worth of Microsoft, then it's not really worth me paying a £12 dealing fee. It's just going to come way too expensive and not worth doing. I don't really think you need to worry too much about fractional shares, but if you are, then obviously Freetrade and Trading 212 are going to be your options. The next thing I want to talk about is user interface, because I come from a design background and having a really nice design app is really important for me. I want something that's easy to use, it's user friendly, and I really like the design because it just gives me more faith in the company that they're kind of investing in these areas and make the customer experience more enjoyable. Hargreaves Lansdowne actually have a really nice app, so I'm going to give them a mark for that. Now Interactive Investor is not the best, their website's not great and their app doesn't look fantastic either. So they've got a 5 out of 10 from me. Now of course this is all my opinion based on my design background. IG app is really nice, it's not as nice as Hargreaves Lansdowne, but it's also really nice. Vanguard looks really old fashioned in my opinion and I don't really like their user interface. AJ Bell is by far the worst, it looks really out of date and I wouldn't go for that one. Freetrade looks really sleek and well designed, probably because it's a newer app and they've had a lot of funding to spend on the design. and redesigning some of these bigger people is just a massive monster job. So I put Freetrade in first and Hargreaves Lansdown in second place. Now the next thing I want to talk about, which I haven't seen mentioned in other videos, which I think is actually really important, so that is the transfer process. So if I want to transfer my ISA from Hargreaves Lansdown to another provider, it's important I can transfer my cash balance and my share balance as they currently stand. Now all of the companies offer this except for Vanguard, because they let you bring across shares, but because you can't buy shares on their platform, do you really want to bring across your shares and then not have the ability to do much with them? The other one which nobody's really pointed out, which is really important, which I tried to do, I had a look at Trading 212. Now Trading 212 will only let me bring my portfolio across as cash, which means I would need to sell £100,000 worth of investments and pay £500 in fees to sell them, move it across, and in the time I would move it across, I would gain no profit on them shares, and then I would have to rebuy them all and pay the fees again through Trading 212. So just to break that down, I would have to sell my shares at Hargreaves Lansdown, which is £500. I would have to rebuy them at Trading 212, which would probably be £100 to £200, so we're talking maybe £700 there. And also in the time in doing so, my shares have gone up about £3,300. So in total, for me to move from Hargreaves Lansdown to Trading 212 would have cost me £4,000 because they don't have the ability to move my investments across as shares, which I think is a really poor option from Trading 212 and something they really need to look at adding to their services. So for that one, I would give everybody a mark except for Vanguard and Trading 212 because of those reasons. Now the next thing I want to talk about is security, because I think that's a really big issue and the reason a lot of people have an issue with Freetrade and Trading 212. I was pretty sure I knew how it worked, but I've double checked just to make sure. So the way all of these companies are structured, they're all regulated by the same Financial Conduct Authority, the FCA, but they're also covered by the FCSC with an £85,000 guarantee. So they do all offer an £85,000 guarantee. And I did think, well, why do they offer £85,000? Because if you have 1 million users and they somehow kind of lose all their money, you've got to pay 1 million people £85,000, which is an enormous amount of money. But what actually happens is through all of these companies, none of them hold your money. They all hold it through a separate nominee company. So if something went wrong with this company, they can't claim against your costs. So for example, if Freetrade or Trading 212 went bust, then the debtors that are owed the money aren't able to claim against your money. It's all completely separate and isolated. And if something went wrong, you would still own all of the shares. So actually when you look into it, between all of these companies, they all have the same protection and the same level of protection. You're no more protected going for a company like Hargreaves than you are Freetrade, although that is a common perception. Now the next thing I'm going to mention is a company age, which does play a factor in a way. So if you're looking for a company that's been around for an awful long time that you can rely on, then let's take a look at these. So we've got Hargreaves at 40 years, Interactive Investor at 25, IG is 45 years old, one of the oldest, as old as Vanguard, who's also at 45 years. We've got AJ Bell at 26 years, Freetrade is just 5 years old, and Trading 212, although it seems like a really new and upcoming thing, it's actually been going for 18 years. Now Hargreaves Lansdown actually manages £86 billion worth of funds and it's a FTSE 100 company, so it's a really solid company. Interactive Investor manages 45 billion in funds, IG 2.8 billion in funds, and that's a FTSE 250 company. Vanguard 6.2 trillion, but that is not through their accounts, that is through people who have bought their funds through other methods. So likely people, all these other brokers are going to have Vanguard funds in their accounts. AJ Bell are actually one of the bigger companies with 120 billion under management, and they're a FTSE 250 company as well. Freetrade and Trading 212 don't mention how much they manage, but that's probably because they're much smaller than the other people. Although they are really popular, but they don't really offer the same kind of fund management that the other people do. So they're not working with big institutions and managing massive amounts of money. They are more geared towards the individual investor. So on those factors, it's clear that the more established companies do have some kind of benefit, and they all do get a mark for FCA compliance. Now what I do want to briefly mention here is Freetrade and Trading 212. The big doubt with them is their business model. It might not be as secure as something like your Hargreaves or your IG or your Vanguard. But actually, if you're thinking about it, if you were a new person coming to the marketplace and creating a company, trying to compete with someone like Hargreaves and charging the same pricing structure, you would just literally not have a chance. So Freetrade are basically trying to replicate what Robinhood have done in the US and trying to get really popular that way. But don't be confused, I think these guys don't make money. They're getting £3 a month for your account fee. They're also getting the FX fee at 0.45% every time you make a trade. And they also make money on the spread every time you make a trade. And they also make money on all the free cash that you hold in your account, and they make money that way. So actually their appeal is to bring as many people in as possible this way, and then when they start placing trades, that's when they recoup their money. So don't be confused just because they're called Freetrade that they're not making money. And with Trading 212 in particular, they want people to make an account so they come across to their CFDs, which are their contracts for difference. Now that is a kind of trading which is really high risk and most people lose their money. So they're hoping that people will also come across into that area. So they lure them in with the free fees and hopefully pull them across into the other types of accounts. And sadly, some people might not know that they're opening that type of account when they sign up. But that is a way you can quickly lose all of your money. So based on this, what I'm going to do now is I'm going to put these into a tier list of who I think is the best and rank them in order. If you have found this useful so far, please smash that like button because it helps the channel grow. If you do want to see my full portfolio breakdown, I'll be doing that in the coming weeks, so make sure you subscribe for that. Now the account you go for might depend on how often you want to trade. Now it is important to note that on average, people who trade less tend to make more money long term. What I thought would be really interesting to do is build a tier list for ISAs where I rank them best to worst. So let's dive into that and I'll show you what I've come up with. So here you see the ratings, S being the best, down to A, B, C, D and E. So in here, I've already put on the E tier your banks. So in here, we've got your banks like your Barclays and HSBC, because they do give you the ability to open stocks and shares accounts within them. The problem is with them is that they tend to be very limited in what you can buy and the fees tend to be very expensive and it's not their core focus, so really it's kind of an afterthought on the design, the process and the whole thing. I started off with one but then I quickly moved into a proper brokerage account. Also in here I have again, like I mentioned, put the Nutmeg, Moneybox and Wealthify because I don't think they're really valid options. If you were looking for something similar to those, just open any of these and buy a regular iShares or Vanguard fund. Or you could add another fund that's available. I'll break those down later, which funds I think are the best to buy. So let's start with the D tier. So this is the lowest tier after E, and in there I'm going to have to put AJ Bell. Now the reason I'm putting them in there is they are quite expensive and the interface is horrible. Although the company manages a lot of money, I don't think they're really a great option. Next on the list in my C tier is going to be Vanguard. Now I know I'm going to get some stick from that because a lot of people on YouTube push Vanguard and think it's great. I really like Vanguard as a management company for funds, but I don't think you should open a share account within Vanguard. For example, if you wanted to buy one of their funds, you could buy it within Freetrade and not pay the 0.15% management fee, so it would work out cheaper. And that also gives you the ability to add more shares and look at more funds. With the Vanguard one, you are going to be limited to Vanguard only, which in my opinion is not a great approach, although it might be good for some people. So in my C tier, next to Vanguard, I am going to put Interactive Investor. Now, although I think they are good and they offer a really wide range of stocks and things you can buy, they do even give you that one free share a month. They do work out quite expensive compared to other options. And I did have an account on there and I didn't really find it a really great experience. I actually moved from them to Hargreaves Lansdown, who are going to be one of the ones that sit in my B tier. Now I've got my account with these currently, I've got my 100k portfolio with them and they have been great and the customer service is very good. So you do get a response for someone who seems really well trained and they know what they're talking about. But as I mentioned, for me, now I'm getting to a higher stage of my portfolio, it's becoming very, very expensive for me to buy companies. Personally, I don't want to be paying £250 when I want to buy a share, and then I've got to pay another £250 when I want to sell it. And you might say that doesn't matter on £27,000 and you make the profit and you lose it, but actually that's £500 down the drain that I don't really need to be spending. Now, alongside these, which is going to be a really controversial decision, I'm going to put Trading 212. Now, Trading 212 would have been much higher in my opinion, but as of late, they are really struggling. Now, depending on when you are watching this video, they may have resolved their issues, but at current, they've kind of closed their account creation, and it's really because they've just been so bombarded with new accounts that they can't cope with the demand, so they've really limited their options. And also for me, wanting to trade in and not being able to trade in my shares and having to pay, as I mentioned, like £4,000 is just crazy, so they need to add that functionality. So they might come back up in the tier list in the future, in my opinion, although for the moment, I think they are going to live in the B tier. Now, of course, they might not be worth you guys considering, or you guys can't even consider it because you can't even open an account at the moment, but I wouldn't worry too much. If they are opening accounts, they are still a really valid option and they are really low cost. The spread that I mentioned is on particular shares, so it might cost you more to buy certain shares with them, but overall, you're not going to really notice it. And to be honest, for the fees, in all of my time having an account, I've not really noticed the fees too much. They're relatively small when you are investing long term, so I wouldn't worry too much about the fees and the particulars. Now, the last two are really difficult to choose between. Now, IG, I think, have got a really wide range of stocks. They They do offer a really low FX fee, which is great if you're buying overseas shares, and they do offer good customer service and their interface is nice. So I think they are going to sit in my A tier. So I think they're a really valid option, and if you are scared to go with something like Trading 212 or Freetrade, they are a really reputable company and they've been around for 45 years, so you have got some security in that sense. Like I mentioned, you are protected the same level of cover with all of these companies. Now, top of my list has to be Freetrade. My initial worries were the security, but I have cleared those up by doing some research, and I think Freetrade are probably the most viable option. And I think for any beginner, there's no fees and it's really simple and easy to invest. And if you have a low amount in your account, you might be worried about fees and thinking you don't want to pay too much if you don't really have to. For me, it's really difficult because I do have a large amount. With IG, of course, you've got the fact they've been around for 45 years and you've got that security in that sense. Freetrade have been going for only 5 years, but I do like the fact they're trying to change the game. And for me, I have to just edge Freetrade above IG just because they don't charge the fees. And it is a balancing act between me, but I do kind of think, is there a point me paying the fees of IG if I don't really have to? Although it is a really nominal amount. I haven't really decided which way I'm going to go. I'm leaning towards Freetrade. It'll be really interesting to see what you guys thought down below. I'll leave links down below to all of these companies. The only one I'm affiliated with, I get a free share if you sign up for Freetrade and one for Trading 212. So hopefully it's quite unbiased and I'm just being completely transparent with you guys. Although I do get a free share if you sign up with Freetrade, I'm not pushing them just because I get a free share. I do think they're probably the most viable option, followed by IG. If you go with either of those companies, I don't think you're going to be disappointed. But hopefully I've shedded some light on the other ones, and hopefully you've now got a clearer idea of where you want to go. So I hope you guys have found this interesting, and please like and subscribe if you have, because I'll break down my full portfolio soon and show you exactly what I'm holding and give you some tips on what you should be buying within each of these accounts. I'd be really interested for you guys to let me know down below what kind of content you'd like to see next. Do you think I should do one of these on lifetime ISAs and junior ISAs? Would that be helpful for you guys, or is there another type of video you'd like me to make? Please let me know in the comment section down below, and I hope you found this interesting. I'll see you guys in the next video.